I'm Corbett Wall with DV Auction, here with your feeder flash for Tuesday, October the 24th. And the Analyst shortcomings were well expected for this cattle on feed report. We expected, with such a bearish cattle on feed report that the board might come out down hard. It started out down some, but started coming back pretty quick, and hardly any weakness really seen that you could blame on the cattle on feed report in your cash markets. And they got pretty close to the cattle on feed report on the October 1st inventories and on the marketings, but on the placements they just blew it. But they've been blowing it so many times over the last 6 months or a year that the industry's pretty well expecting them to blow it. And the industry, for the most part, your people that are out trading, doing a lot of the business, they've got their eyes open. They know that the placements are a lot more than they are a year ago at this time. We've got such a bigger calf crop. That calf crop's been coming to town already. That means more placements, and they pretty much expected it to be that way. So basically the industry has no faith in the analyst predictions on the cattle on feed report, and I think the less attention they pay to them, the better off they'll be. There were several fundamental analysts that were saying projections were going to be a lot bigger than that. The handful of people that watch this report were well aware of it. So, it's good that we kind of blew over that, and we can go right on to the next thing and start getting back to business, because we got a big fall and a lot of it left to go and a lot of cattle to sell. But look at the board for Monday. December live cattle up 15 cents at 116.75. October ended Monday at 111.52. November feeder cattle down 35 cents at 152.72 on Monday's close. And none of your feeder contracts were really down very hard, especially coming off of that cattle on feed report that really showed to be bearish. And on top of that, your corn contracts were up 6 cents or more, and you would have thought there would have been more pressure on your feeder cattle, but there just wasn't. Look at your weighted average prices on last week's fed cattle trade. 95,400 head sold in the 5-area feeding region. Compare that to a year ago the same week at 57,700 head. We're moving them through there pretty fast. The market was absolutely steady. Can't believe how close the weighted average prices came in to the same weighted average previous week. But live steers come in at 110.87, down just 14 cents. Dressed steers at 174.92, down just 4 cents. Amazing you can get that close. We're getting into November, and it looks like they've got a whole lot of contracted cattle tied up for November, close to 250,000 already, and we've still got a ways to go before the end of this month. But could be tough treading, but we're also seeing better demand for our beef as we're getting closer to the holidays, and they're doing a lot of ordering, and these end users are stocking up their shelves, getting ready for orders for the big ribeye logs and things like that people get in for their big holiday get-togethers. But look at that cattle on feed report a little bit more. Those placements on there, which we talked about, were 13.5% larger than the same time a year ago. That's the largest September placement we've seen in 7 years. Your September placements had the biggest gains in Nebraska and Colorado up there in the northern parts of our 5-area feeding region. We saw gains on placements in every single weight group, but the largest was in your 800 to 900 pounders. But your analysts missed those placements. If you look into what they thought it would be, would have come out to be by 113,000 head. And what's funny is they only missed the inventory by a fraction of that. So it really doesn't jive on what they thought the inventories were going to be. You would have thought if they'd missed the placements that far, they would have missed the inventories too. But it's just a big head scratcher. And like I said earlier, nobody has any faith on the analysts' abilities to nail the placements, so they just don't pay any attention to it. Look at your feeder market. On Monday, real-time index ended the day at 152.25, down 19 cents. but most of your feeder cattle were close to steady. Look at your big markets. Oklahoma City at 7,500 head. All classes sold steady to $3 lower. If you remember a week or two ago, I told you that these calves are dominating the runs, even in a yearling market like Oklahoma City. But this week I noted that 51% of the cattle on offer there weighed under 600 pounds, which is really saying something for a market that normally just sells a lot of big yearling feeder cattle. Look at Joplin Regional Stockyards, 4,900 head there. Calves steady to $3 higher. Yearlings steady to $2 lower in kind of an uneven run, but if you looked at Joplin, only 15% of that 4,900 head weighed over 600 pounds. So calves are totally dominating the runs pretty much everywhere you go. But you look at Bluegrass Stockyards in Lexington, Kentucky at the brand new facility there. Just before lunch, they sold 131 head of steers, weighed 796 at 159.30. You look at McCook, Nebraska at Tri-State Livestock, 2 loads of steers weighed 950 at 154.75. That's your feeder flash for Tuesday.